Hello everybody, this is David Perruzza from the Foundation Group Real Estate team. And if you are a potential purchaser of real estate and you've been sitting on the sidelines and hard to get financed, then this video is definitely going to be for you. The Toronto Real Estate Board just released their home sales data, and as I'm sure most of us are already aware, prices have come down to the tune of about 18% from the same period last year. Now, one of the main reasons for this, not the only reason, but one of the main reasons for this is rising interest rates. And with rising interest rates, it's caused a little bit of fear and frustration with people that are either looking to step into the market for the first time, purchase a new home to live, or add more doors to their investment portfolio. But with the high interest rates, it's become more challenging for anyone to purchase real estate in Toronto. As realtors, we are always looking for new solutions for our clients to help them get into the marketplace. One of these solutions that I think is very interesting for a specific type of buyer pool is what's called a rent-to-own financing option. This option is for people that are looking to enter the real estate market that perhaps are looking for an alternative to your traditional banks or even an A or B lender. And for that reason, I'm joined by Marco Albanese of CamMortgages to talk a little bit more about this solution. Marco, thanks for joining me. I really appreciate this, and I really appreciate you hosting us in your offices. We've known each other for a long time. We consider you a strategic partner in our toolkit that can help any of our clients with any of their financing needs. But we're here to talk specifically about a rent-to-own solution for specific buyers that are looking to enter into the marketplace. So maybe we can start by answering the question, what type of purchaser does a rent-to-own strategy or rent-to-own financing apply to?
In today's market, there's a lot of challenges right now because of rising interest rates.
Of course.
There's also a dip in the market that, where a lot of people thought that the dip in the market was going to offset the rising interest rates, but we're not there. The rising interest rates are a little bit more profound.
Right.
So my first obligation to any client as a mortgage agent is to dissect a client's files and their finances to see why they are not able to apply to a traditional A-side lender, any of the big banks or the monolines, or even B lenders,
Yep.
right? Which are a little bit more tuned for business for self people that are looking to enter the market, or just people trying to increase their real estate portfolio. The rent-to-own program becomes another option because of the stress test that you're allowing someone to enter the real estate market by renting the property that they are going to eventually own.
Yep.
So the program itself has, and there are many across the board, full transparency, we're not here to discuss any rent-to-own program in particular, but across the spectrum of rent-to-own programs, you're basically going into a program where you're purchasing a property with your realtor, having done the work as we've done with other clients.
Yeah.
Let's see where they qualify. Let's see what's missing. What is the entry point for them to enter into the rent-to-own program, and then I connect to that program to say, is this person qualified to do this type of program? To
take the next step.
Right.
Exactly.
Right.
So I think, you hit the nail on the head, right? You've got your big banks, you've got, your A institutions, your B, you've even got private financing, and we'll talk about that later and how it compares. But the reality is there is another option out there for people. So before we get into the nuts and bolts of, the program specifically, what are some of the pros?
Yeah, and some of the pros come from some of the cons, which is people that have credit challenges.
Yes.
People that don't have enough down payment to enter the market. There might be people just entering the workforce, and because they don't have enough tenure at their current job, they need that in order to get into your traditional style lending. You might be new to Canada, and again, that's going to obviously affect how long you've been here, and therefore how long you've worked at your job at the current time. Yeah. So if you fall into that bucket, the rent-to-own program, which again, there are various ones, but there are particular ones that also really hold hands with the client throughout the entire process to really do all of the math up front to make sure that the exit strategy, because the exit strategy is after you pick a 2, 3, 4-year term, you want to be able to safely go into what will be either a traditional A-side lender or a B lender.
Yeah, and exactly. So it's kind of like a light at the end of the tunnel scenario, where you're opening the door enough for someone to come in, but at the end of the day, within 3 to 4 years, there is very strong hope that they're going to be entering into a traditional mortgage anyways.
Yes, with the benefit of living in the property that they want, and the stability of knowing that the landlord is not going to sell it or move back into that property. So it also provides that stability to a current renter, because obviously a current renter pays somebody else's equity. Yeah. Right. This way, you're entering into an opportunity where yes, rent is a part of the cost. Yeah. Then there's a surcharge for adding on to the down payment, but you're living in the place that you want to live in.
Does the rent being paid get deducted from the value of the home that will eventually be mortgaged?
No.
No. Okay. So it's strictly a rent program.
Right.
You're renting it from a purchaser, but you have the option, or you will be eventually able to qualify for a mortgage, or hope to qualify for a mortgage in 2, 3, 4 years.
Right, and that's the important part. So when we look at our clients, and Dave, you and I have had one that we've shared a couple of months ago. Yeah. The process begins with introducing a specific rent-to-own program, let them feel it out, have the discussion, and then tackle the ultimate question, which is, are you ready to see if this is something that can fit for you? Yeah. Right? Because the person was down payment challenged. You have X amount, which is great. You have great credit. You can create a term that can be beneficial to you, both in the short term and long term. But knowing that you are going to make some lifestyle changes because of the increase of your monthly debt obligations via the rent, and also what you're putting as forced savings towards your down payment.
Yeah, and I think in this day and age, whether you're buying a resale property or even a pre-construction property, which we do a lot of as well, you kind of have your numbers up front, right? It's important to have all those numbers up front, which you do very well in terms of providing that level of detail. And you have to be able to make certain changes within your life and lifestyle to save for what will eventually become a major asset for you long term, right? And that's the beauty of buying and investing in real estate. But let's go back for a second, because I think we touched on it, but what are like some of the the tangible drawbacks of this program? Like, why would somebody kind of say, I don't think I can get into something like this?
There are some programs that start at 3.5%. There's other ones that are at 4%. Some even as high as your standard national statistic of using 5%. Yeah. We're in a market where prices are softening. Yes. Right. So if it's extremely important that the client is aware, and that is our job, that we allow them to get independent legal advice, because that compounded appreciation, if it's not there after 3-4 years, is it worth it for them? What is going to be the impact? What would happen at that point if you're purchasing a property at $600,000 and you're going to be paying it out at $700,000 to get into the program at that point, and you're not able to bridge that gap. Yeah. that could be a risk
Got it.
to some people. But again, overall, as history has shown us, it's not really about timing the market, but your time in the market.
Yes.
So you need to be conservative in terms of the price point that also you're looking at. And I'm very astute with my clients about that, because a rent-to-own program, especially in the case of a home itself, you're paying also for the repairs. There's a problem with the roof, you're paying for it.
Yeah.
Doesn't come off the price.
Yeah.
Right? So it's an extra expense that you need to be aware of.
Yeah, these are all very good points. And I think appreciation percentages that you highlighted earlier, anywhere from 3 to 5%, my opinion is fairly reasonable, right? Just based on
Historically, absolutely.
Historically is very reasonable. It's not something that you feel as if you're being taken advantage of, which is the last thing that you want to feel in a situation like this.
And I want to be clear that the appreciation discussion is more tuned with the person's actual debt obligations at the time when the program ends. So it's not the problem that it's 3% or 5%,
Yeah.
even 6%,
Yeah.
right? Especially in Southern Ontario.
Yeah.
Is the client prepared at the time that the program it comes to maturity to jump onto your traditional lending?
I'm curious though, I think maybe some people who have either heard of something like this or are hearing, us today for the first time, where and if at all does this compare to the private lending side? Because we've seen a lot in the media lately. I hear it all day long. Anyone that can't get bank A, B, or even C lending, they're now talking about private, high interest rates, high risk. What is, if any comparison to that, Marco?
Private lending in and of itself is meant to be a short-term solution.
Yes.
12 months, maximum 24 months. Most private lenders only charge interest only for the term that you're in. There are some that will have some principal payments in it, but in a year or 2 years, let's face it, you're not paying too much in terms of principal.
Yeah.
The fees are, that's where it starts to become something where, you're being charged nearly 9% plus 3% lender fees. There could be brokerage fees there applicable as well. You're paying both legal ends of things, the appraisals. It starts to look scary. And the exit strategy, how are you going to get out of it? So if you're looking to purchasing that house, what are you going to be able to prove 1 or 2 years before
the window's
that's
very
going to be
short.
so extraordinarily different?
Yeah.
And paying all those exorbitant fees.
Yeah.
I would say a rent-to-own program that the only fees that are attached to this is a home inspection and your independent legal advice.
Yeah, exactly.
You're looking at around $1,500, where fees on a private side will definitely, without argument, be in the thousands and thousands.
Yeah, and we've had a number of discussions on this. I mean, we've had a number of clients, whether, like we talked about earlier, whether it's an investor or just someone looking to upsize and buy a new home. And so, I think these conversations are very important, especially how the market is changing. I brought in some data from February in Treb. This bidding wars are back. Supply is still low, demand is coming back. I think, the spring market is going to be very interesting for all of us. That's going to change a lot of the conversations that maybe you're having with some of your clients as well. And I think we kind of just scratched the surface. I mean, with rent to own, there's a lot. I've seen your summaries to clients, tons of numbers, tons of information to consider. Definitely not enough time here to go through it. So maybe you can tell us quickly how someone would get started, and then what I'll do for everyone is I'll put Marco's information in the description below, and if you ever want to, schedule a one-on-one with Marco, he'd be more than happy to take that conversation to another level.
Yeah. My first obligation is to really see why you're not able to get into a traditional lender.
Yeah.
So we want to build your file right from the start. And I don't mean a pre-approval, simple mortgage calculator. Let me underwrite the file,
Okay.
right? So that we can put some real numbers together. And when I work with realtors, and as we've worked in the past many times, once that file is built, it takes seconds really to input the property, the cost, and all of the things that are attached to that property to figure out where we go from there. Once that is determined, the client accepts that there might be some obstacles for them to go the traditional way.
Yeah.
I then introduce it just to say, look, this is the framework of a specific rent-to-own program,
Okay.
which I think there are some pretty good ones out there.
Good.
At that point, let them speak directly with that lender, with me on the call, Zoom, person, or phone,
Yeah.
and let's discuss what we're finding.
Good.
Get all the information because they want that information as well.
Yeah.
Your T4s, your NOAs, your credit bureau, your mortgage application. The same standard things are
Pile
always
of
applied.
paperwork that everyone
Well,
has.
I always call it, ammunition, right? So if I have all of my things all ready to go, I know which ones that I need, and that is all to the benefit, obviously, to the client, and then also to the realtor, because
Yeah.
we want to be as efficient as possible too, to look at things that are within someone's grasp.
Yeah.
The rent-to-own program then comes back and says, this is what you can afford.
Okay.
Right? So again, there's that
Helps
final.
me a lot.
Absolutely,
right?
absolutely. And then depending on how the market shifts and whatnot, depending on how soon the person is ready to go, that data is real up to that point that the person is ready to, again, after their home inspection, independent legal advice, if it looks like something that they would be committed to, because once they're committed, you're committed.
Yes.
Then we go out there and you go and find them the property.
Perfect. That's good. Yeah, I think we've definitely preached to all of our clients that it's very important that you align yourself with someone, a realtor, that has solutions in place, whether it being from a lending side, a legal side, home inspectors, designers, maintenance people, the sort of that whole toolbox that you want in someone that's going to be helping you purchase or sell real estate. And Marco is the same way for sure. We need options. We can't be pigeonholed into one solution and one solution only, and then you feel the pressure to maybe make a decision that isn't right for you. So for the sheer fact of the matter that you can present those options, and once you've got that file in front of you, perhaps they are eligible for a B solution or even an A solution after you've looked at that data because they've received some poor advice from someone else in the past. I'm sure you come across that all the time.
I think that's a fantastic point, Dave. And that's exactly it, because if this program isn't a solution, to get to discussing it, you will have already been presented the whys to your struggles.
Yeah.
And sometimes it could be paying off some credit card debt.
Yeah.
It might be beneficial to pay off a car loan that there's only $10,000 left on it, but your payment is still high. It's the payment that's affecting you and not so much the sum of what's remaining. So, it might be better to say, well, maybe a parent or another family member might help me on that, because your A side, your B side, again, those are your first choices. Sometimes presenting the different options gets you a little bit more in tune with what you need
Yeah.
for that A side, B side, and it becomes a more comfortable reality
Yeah.
to someone mentally. And that's part of it. Like, this entire journey is always a struggle, and when I tell people, if I have 6 properties, I've been a landlord for 27 years, for some people it escapes them, and then I speak to other people that have 10 times more of my properties that are even 10 times more relaxed than I am. Whether the rates are where they are or where they're going, but understanding the math to make your life what you want it to be,
Yeah.
where you want it to be.
Exactly,
Yeah.
exactly. I think that's all very helpful. Listen, I think we could go on and on. maybe we put a continued part 2 segment to this video on just the data of a rent to own, or you just call Marco, or you call me first, and then I'll put you in touch with Marco. But listen, there is hope. That's what I'm getting from this.
Right.
There are options for everyone, as you've been so helpful in letting us know and identify. We're gonna cut it there. But again, if anyone needs to learn a little bit more about this, reach out to me directly. All my information will be in the description, as well as for Marco. Until then, Marco, thank you, sir.
Thank you.
Very
Thanks.
appreciate it.
Thanks.
All right,
Thank
take
you.
care.